Hello there, traders. I want to draw your attention to a little spot I've identified. I actually took this trade today. Let me get these blue dots way out of the way for you. Okay, so right there, this candle created a fair value gap. The 50% mark of that candle, which can be drawn out with a Fibonacci from here down to that top of that deal there, 50% mark is where I drew that blue line. I'm a little bit off on my thing, but that's where I drew that blue line. Okay. I usually take the box off, but there's the fair value gap right there on this candle. So it represents from the bottom of this candle here to the top of this candle here. There's our fair value gap. I can move it up just a touch. A little bit of volume and efficiency because those corners don't quite touch. So, but you include that in the gap. So then I drew the Fibonacci, this blue line in the middle, and that is called consequent encroachment. Let me write it in there for you. Consequent That's the way you say it, consequent encroachment. And that's where this blue line is right here, okay? I will usually abbreviate it as CE. And that would be for a negative fair value gap. So normally I might write it like this. Abbreviated, it would say CE minus fair value gap. And this is a 30-minute chart. So I'd also notate that because signals from a 30-minute chart are a little more powerful than on a 1-minute chart. Okay, so there we go. Consequent encroachment. That's just the way I would normally label it if you see that on my chart anywhere. But it's basically the 50% mark of any of these fair value gaps. And so I marked it with this line. Well, I was watching a different product when this occurred, but down here you can see we started having some resistance. We weren't going very much lower, and that was the London low. We came back down, tried to test it a little bit, and we were just having trouble. And when this one started reversing back up, I went ahead and took a long position somewhere in this candle, maybe even in this candle, and I put my take profit right up there at that consequent encroachment. I'm going to remove this blue box so you can see how wild it is, how price behaves. You can see it went to the tick right there. That took my profit. That was about a $400 trade. And then, of course, reference points. London low is always a good reference point. PM session low. We did have it react there right here before going back up. But so if you were going to mark a consequent encroachment on this one, it would probably be right around there. Right, just the halfway. You can even eyeball it, halfway point. Because sometimes it doesn't go exact. But if you were going to put one right there, when this price goes up tomorrow, I would expect it to go either to London high, that's a consequent encroachment, or there. Or it could go here, or to here. But those halfway points are important to note because a lot of times price will go to them and then stop dead in their tracks and reverse, just like it did here. Went up to it, stopped, all the way back. And that's why they teach when you get into a position. So this is our negative fair value gap right here. So you would want to put your stop up above here. Once it gets down a little lower, you can move it up above the 50. Once you're in good profit, you can move it down below where you don't lose any money. But what I would have been targeting on this one, if you scroll backwards, you can probably see there's other areas. I have relative equal lows marked down here. That's kind of what I was thinking we were going after today, but we didn't make it. But this one gives you a daily reference point. London low. That's where London traded. And price, for some reason, likes to go after the liquidity that London created. So here's the London high. It needed to take that out. PM high from yesterday is way up here, and we didn't even get close to that. But if you Fibonacci this out from here all the way down to, say, here, I bet you the 50% mark is going to be pretty close to right there. You want to try it? Let's try it. I have to shrink that down. Okay, so from the PM high right here to the London low right there. And then let's blow it back up and take a peek. Okay, it went a little bit above our 50% mark. We went to the 61.8. It's dead on that line. And that's another level. This one right here was original optimal trade entry, which you can see it would not have taken out your stop if you had it above this candle. But 61.8 is one level. If it doesn't go above the 50, that means it's a really strong downward move. But it's kind of interesting. The 50% of this fair value gap is 61.8% of this one, of the Fibonacci. That's pretty cool stuff. But that's what it usually does. Market will move, and then it'll take back about half of what it did, and then continue its direction down. You learn to predict that movement, learn to recognize it, write your own paycheck. Good luck and good trading. Thanks for watching.